Okay, class, we're about to start section 3.5, which is a walk on Wall Street. Our learning objective is to read information from a stock listing, calculate cost of buying stock and profit or loss from selling, study the price to earnings ratio, and use it to analyze the value of a stock, and then finally to calculate profit from a bond sale. Now, according to our syllabus, for section 3.5, we're to do page 267, 273, and also 278. Okay, now, at the bottom here, it says, if you own stock in a certain company, why are you entitled to a periodic dividend? And there could be various reasons, but the main one is you are a part owner in the company. So you share in the profits. Okay, now we go over to page 2. Now we talk about here what is called market cap. Oh, I'm sorry, I went to the wrong page. Okay. Number 2, describe any advantages or disadvantages of buying stock in a company that pays dividends. The advantage is that you get a periodic payment . The disadvantage is that the company might do better if they reinvested the money that is going out. Okay, now, it says besides issuing stock, a company can also issue bonds. Usually bonds are issued to raise money for the company for startup costs or special projects. A person who purchases a bond is really lending money to the company. The company in turn repays the owner of the bond its original value plus interest. As a general rule, bonds are a safer investment than stock, but stocks have greater growth potential. Describe the difference between stocks and bonds. Owning stock means you are a part owner of the company. Buying bonds means you are a lender to the company with no ownership. Okay, now stocks can be bought and sold on a stock exchange. The price of a stock, which varies from day to day, even from minute to minute, depends completely on the amount that investors are willing to pay for it. This can be affected by the profitability of the company, the economy, scandals, even global political concerns. Investors buy or sell stock through a stockbroker. Traditionally, this was an individual working for a brokerage firm, but it's become common for people to use online brokers, in which the investor initiates the buying and selling of stocks online. In either case, the brokerage charges a fee called a commission. for the service of having their representatives buy or sell the stock at an exchange. Bonds can also be bought and sold like stock. It says, how can an individual buy stock in a company? Through a stockbroker. Either at a brokerage firm or an online trading site. What are some advantages of investing in the stock market? You can make money in two ways. Through dividends or the price of the stock going up. Okay, now we move on to the next page. It says, when all is said and done, there are two ways to earn money from stocks: buying a stock that pays a regular dividend and selling shares for more than you paid for them. This means that investors are tremendously interested in the day-to-day price fluctuation of stocks, as well as indicators of how well the company is doing. A stock table is a listing of key information. Stock tables can be found in newspapers and online financial sites. The stock table shown below, generated at 10:37 a.m. on September 4, 2015, is for a company called Computer Programming and Systems, Incorporated. Let's see if we can make sense of this mysterious mass of numbers. Okay, now there are a lot of terms here that are in bold that we need to pay close attention to. So it says here, there's a whole lot of information here, and it's going to take some explanation. We suggest that you take notes as you read through the descriptions below, but you might try a quick read through now, then refer back when you get to questions 6 through 11. At the top, we see the name of the company and a ticker symbol. So we're going to look at the ticker symbol, the previous close, the open, bid ask, first year target estimate, the beta, the volatility, earning date, days range in 52-week range, volume, and average volume. So you can read all of the rest of this at your leisure, but let's take a look at this next page. And also on the back here we have market cap, price to earnings, EPS, dividend, and yield. And EPS is earnings per share. Okay, we're going to look at Facebook here. It says, what is the current price of the stock? Now the current price of the stock is shown here in the big numbers. So it'll be $87.27. Now, what are shareholders trying to sell it currently asking for? So the ask tells you here is $87. The ask price is $87.07. Okay, now, what do analysts predict the price will be in 1 year? So we have 1 year estimated target, which would be $111.75. And going back to number 6, in order for a person to do the ask price, they must be an owner of the stock in the company. So those that own stock in the company want to sell it at $87.07. Now it says here, is this stock more or less volatile than the market as a whole? How do you know? it's less volatile because the beta is less than 1. Now, beta was one of those terms I outlined on the previous page. Beta basically tells the volatility of the market. If it's less than 1, if your beta is less than 1, then you are not as volatile as the market. But if it's greater than 1, then that tells you that this stock is more volatile than the market is. Now, number 9. What is the highest stock price in the last 52 weeks? Okay, so what we would do is go to the 52-week range and look at the highest price. It'll be $99.24. Does Facebook pay a dividend to shareholders? So we see dividend and yield. It has not applicable, so it's no. Not applicable, so it's no. They do not. Alright, so now we go on to the next page, to problem number 11. It says here, use the market cap to find how many shares the company issued. Okay, now, if we look back here, the market cap is $245.89 billion, which is stated here. And then we want to divide it by the price that is currently selling at, which is $87.27. Now, when we divide this out, this will give us 2.82 billion shares. Now, it says, as previously mentioned, there are two ways to make money from stocks. Buy shares of a stock that pays dividends, or buy stock at a low price and sell it at a higher price. But of course, you can't just go buy stock at the corner store. You need to use a brokerage firm, placing an order, which is then carried out by representatives at the stock exchange. In exchange for that service, the broker charges a commission, which varies among brokers. Brokers can also make recommendations concerning what stocks to buy and sell, which further justifies their commissions. The amount that an investor receives from the sale of stock is called the proceeds. The proceeds are equal to the amount of the sale minus the broker's commission. Next, we'll look at some examples of buying and selling stocks. Share of Apple Computer closed at $12.89 on April 1st, 2004. Suppose that an investor bought 600 shares at that price using a broker that charged a 2% commission. So it says here, find the amount of commission that was paid. So you bought 600 shares at $12.89, which cost $7,734. Now you have to take this amount, the $7,734, and multiply it by the 2% commission. And then that will give the broker $154.68 commission. Now, it says here, find the total cost of buying the stock. So you have to take the cost of the stock plus the commission, which is equal to $7,888.68. Now, a stock split occurs when a company increases the number of outstanding shares. Most commonly, this is a 2-for-1 split in which the number of shares doubles. This can be done for a variety of reasons, but the simplest explanation is that when the price of one share gets particularly high, it tends to scare away smaller investors, and the split effectively halves the price of one share. In any case, the net result is that in an instant, the number of shares owned by shareholders doubles. Apple did a 2-for-1 split on February 8, 2005, then a 7-for-1 split on June 9, 2014. How many shares would our investor have owned after the second split? So it'll be 600 times 2, which is 1,200, and then 1,200 times 7, which is 8,400.